So the first asset we are going to be looking at today is going to be the US oil spot. And at this juncture, with the way things are going right now, for those of us who capitalize on the bearish momentum from yesterday's technical analysis session, please kindly maintain a protective measure on all sell positions at this time. The US oil prices are experiencing a slight decline as market participants appear to be capitalizing on profits from the recent uptick in the crude oil prices this month. Remember, since the beginning of this month of February, the prices of oil had continuously risen to the $78 area, and through the path had consistently found higher highs and higher lows in that regard. And I'm of the opinion that the selling pressure we witnessing here in the last 48 hours could be as a result of profit-taking activities. And before we go into the details of the technical details of this market dynamic, I want to let us know that market participants will closely be monitoring the key events such as the EIA crude oil stock change, which is coming up later today. This will be giving us an insight into the balance within supply and demand in the United States, and of course the FOMC minutes, which could offer valuable insight into the potential path of interest rate cuts and the current policy stance of the Federal Reserve. And you know that this event here, this development have the potential to significantly influence the US oil, which is considered to be a US dollar denominated asset. So with these factors in mind, let's run through what has really happened since the new week began. Now, at the beginning of the week, for those of us who are part of our Monday edition, remember we caught this range where we saw price action confined within the $78 level and the $77.60 level, to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have a range like this, we usually exercise patience, waiting for price action to give us a signal in the form of either a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. Now, in addition to this range, we acknowledge the fact that we had an ascending trend line, which we identified on the higher time frame. Don't worry if you were not part of our earlier edition. I will be taking you through that in a moment. So we saw this ascending trend line in place, and of course a range above the ascending trend line further emphasized that buyers may likely take over the market anytime soon. And with this understanding, we positioned ourselves just right above the resistance line of that range at the $78 level to capitalize on the uptrend move. And in fact, we saw price break out of that structure and moved about 47 pips thereabout before the consolidation phase happened. And of course, we did suspect that that will happen on Monday. Remember, we talked about the US public holiday, which could bring in subdued trading activity for that day, and I did emphasize that we could see a sideways trading activity for Monday's session, and that was exactly what happened. And we moved our stop losses accordingly, and we got taken out with a worst case scenario break even on that one, depending on where you move your stop losses to. Now, during our live session yesterday, we begin to notice that buyers were finding it difficult to break through the $78.50 level, as you will see here. And the inability of buyers to break out of the structure was a sign that sellers might likely take over the market. And considering the fact that the $78.50 level had been a strong selling niche since the month of November last year, and You know how we use our key levels in this community. As long as price remains below the key level, we obviously want to be looking out for patterns and structures that supports the idea of selling. Now, to position ourselves for the bearish move here yesterday, we said that we will be selling the breakdown of the ascending trend line and the $78 area. Now, what we said here yesterday, we already saw price break down the support line during our live session, and I did mention that for those of us who missed out on the selling opportunity, let's see if the market will come back to retest the structure that was broken to incite a downtrend move. And this was exactly what happened. With a sell limit order placed at the $78 area, we saw our sell position triggered, giving us our first sell position for the week. And we identified multiple levels to join the bearish momentum to the downside, as we had a $77.60 area and the $76.50 level. This level here was just added this morning while I was trying to decipher what the next course of action would be. So at this point in time, you should be having a minimum of 3 sell positions running, where the first sell position is running with about 140 pips, while the second position is running with about 100 pips thereabout, giving us a total of about 240, while the third position here is running in a loss of about 12 pips at that point. So for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby. So at this point in time, it is pertinent that we move all our stop losses and secure this current sell position, as everyone looks forward to the FOMC minute coming up later today. So I'm of the opinion that somewhere around the $77 area seems most appropriate to move all stop losses to, while we ensure that we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Remember that we have key events coming up today and tomorrow: the EIA crude oil stock change and the API weekly crude oil stock, which is coming up tomorrow, is likely going to be influencing the current market dynamics in this market environment. And of course, as technical traders, we do know that the anticipation of this event alone has a way of influencing our market participant who prepare for the event. And in that regard, we shall be looking out for structures and patterns that we will be using to guide our trading decisions for today. But before we go into the details here, and for the sake of those who missed out on our earlier sessions, let's run through what really happened in this market, what we saw at the beginning of the week, and of course have an holistic perspective into what is going on here. Now, at the beginning of the week, what we did on the daily time frame was to take into consideration the nature of price action since the month of July of last year. And when we did that, the first thing we observed here was this key level around the $78.50 level. Now, in addition to that key level at the $78.50 area, we noticed that despite the strong bearish momentum that started in the month of October/November of last year, we saw that as soon as price got into the $68-67 area, it became difficult for sellers to break through, and the momentum did not continue anymore, as instead we begin to notice some series of higher lows, giving us a potential reversal pattern to work with, where the neckline of this reversal pattern lines up or coincides with that key level at the $78.50 level. Now, this reversal pattern will not be valid unless the key level is broken to the upside. Now, with this situation in mind, what we did now was to scale down into the 1 hour time frame so that we can see how market participant will be reacting to this key level at the beginning of the week to make a well-informed trading decisions. Now, when we scale down into the 1 hour time frame, this was what we saw. We saw the range, we saw buying opportunity as first that went into a break even before this bearish momentum continued to the downside. And please, I did emphasize earlier that we should all move all our stop losses to secure the current sell position, as anything could happen today. Now, going into the New York session today, I was able to identify a simple structure that we will be using to guide our decisions going forward, and that is this descending trend line. I was able to highlight here after connecting the series of lower highs. Now, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we have no business considering buying this asset. So at this point in time, we shall continue to maintain our bearish perspective, looking out for more selling opportunities if price remains below the descending trend line. And as it is right now, I did emphasize earlier that we have our third sell position triggered at the $76.50 level, with the hopes that price will continue to the downside. So let's see how far this bearish momentum is going to go. And if price continues to drop to the downside, we have another level, the lowest point in the last 1 week, which is around the $75.75 level. So I will encourage us all to mark out this level too as well, $75.75 level. So let me label this one. I would encourage you to do the same too, $75.75. If price goes ahead to break down, retest that structure, we definitely want to be having more sell positions to our existing trade. So that is how we are going to be managing the bearish bias on this particular asset. However, in as much as we're looking out for more selling opportunities in this market, we cannot ignore the potentials that buyers could still take over this market. Of course, we know of the geopolitical tensions in the Middle East, which of course has heightened concerns as regards to disruption of oil supply to the global market. And of course, this, I think, is the major reason why price of oil has not nosedived significantly to the downside, hereby stabilizing the prices of oil. So in that regard, we never can tell that buyers can still come in this market. And if buyers do come in, what are the conditions we want to see on this chart that will make us feel comfortable buying this asset? Well, the first thing we are going to be looking out for today is to see that this descending trend line is breached and broken to the upside. So if this gets broken to the upside, then at that point we will start considering buying this asset. And to make things easy for us to capitalize on that move, we have this level at the $77 area. So if price breaks out of both the descending trend line and the $77 area, we should prepare ourselves for buying opportunities, and of course look out for more opportunities to buy at the breakout of the $77.60 area, $78 level, and of course the $78.50 level. So we are only buying these assets if price breaches this descending trend line and the $77 area. So you can see how crucial this descending trend line is at this current juncture we are in the market. So let's mark out the trend line, mark out these levels. If price continues to stay below the $77 area and the descending trend line, will remain bearish in this market, looking out for more selling opportunities below the $75.75 area, and we are not buying unless the descending trend line is breached and broken to the upside. So this is my simple view on the US oil spot for today. If you have any questions whatsoever, feel free to let me know in the comment section.